know the secret to low-cost tech investing? Unveiling FTEC ETF. Hey there, Chat ETF fam. Welcome back to the channel. Today, we're diving deep into the world of technology investing, and guess what? We're going to crack the code on potentially snagging some sweet returns without breaking the bank. We're talking about a little gem called the FTEC ETF, but before you rush off to buy it, there's more to this story than meets the eye. We'll uncover whether it truly boosts your portfolio's diversification or if it might actually be a risk in disguise. Plus, is it even possible to replicate what FTC offers with individual stocks? Buckle up, because we're about to answer all your burning questions and transform you into a tech investing guru in the next few minutes. Let's get chatting. Question 1. What is FTEC ETF? FTEC, ticker symbol for the Fidelity MSCI Information Technology Index ETF, is an exchange-traded fund, ETF, designed to track the performance of the MSCI USA IMI Information Technology 2550 Index. Let's break down what this means. Target, tech-savvy. FTEC focuses exclusively on the information technology, IT, sector of the U.S. stock market. This means it invests in companies that develop, manufacture, and sell IT products and services. Index hugger. FTEC is an index fund, meaning it doesn't try to outperform the market by picking individual stocks. Instead, it passively follows the holdings and weighting of the underlying index, the MSCI USA IMI Information Technology 2550 Index. Index breakdown. MSCI stands for Morgan Stanley Capital International, a leading provider of stock market indexes. USA IMI, USA stands for United States and IMI for Investable Market Index. This index captures a broad spectrum of US-listed IT companies, including large, mid, and small capitalization, cap, stocks. 25/50ths, this refers to the weighting methodology. The index uses a modified market capitalization approach, where the holdings are weighted based on their market cap, but with a twist. Companies with a smaller market cap, between 25% and 50% of the largest company, have a slightly higher weighting than a pure market cap approach would dictate. This increases the fund's exposure to mid-cap stocks, compared to a traditional large-cap focused technology ETF. Key features of FTEC. Diversification. By holding a basket of IT companies across various market caps, FTEC offers diversification within the tech sector, reducing risk compared to investing in individual stocks. Low expense ratio. FTEC boasts a competitive expense ratio of 0.8%, which means the annual fee charged by the fund to manage its assets is very low. Performance. FTEC's performance is directly tied to the underlying index. You can find historical returns information on various financial websites. Question 2. What is the FTEC ETF's primary investment objective? Here's a breakdown of how this translates into the ETF's goals. Sector focus. FTEC prioritizes investing in companies within the information technology, IT, sector of the U.S. stock market. This means it targets businesses that develop, manufacture, and sell IT products and services. Matching the index, the ETF doesn't actively try to outperform the market by picking and choosing individual stocks. Instead, it passively follows the holdings and weighting of the underlying index. So, the success of FTEC is intrinsically linked to how well the MSCI USA IMI Information Technology 2550 Index performs. Understanding the index. The MSCI USA IMI Information Technology 2550 Index aims to capture a broad representation of US-listed IT companies. It includes large, mid, and small-cap stocks. The 25-50 weighting methodology assigns weightage to holdings based on their market capitalization, but with a slight twist. Smaller companies, between 25% and 50% of the largest company's market cap, receive a bit more weight than a standard market cap approach would dictate. This increases FTEC's exposure to mid-cap stocks compared to a traditional large-cap focused technology ETF. Benefits of matching the index. Diversification. By holding a basket of IT companies across various market capitalizations, FTEC offers diversification within the tech sector. This helps spread risk compared to putting all your eggs in the basket of a single company. Lower costs. Passively following an index typically translates to lower expense ratios for ETFs compared to actively managed funds. FTEC boasts a competitive expense ratio, meaning the annual fee for managing the fund is minimal. In essence, FTEC seeks to provide investors with a cost-effective way to gain exposure to the growth potential of the U.S. technology sector, while reflecting the performance of its chosen benchmark index. Question 3. Does the FTEC ETF track a specific index? Yes, the FTEC ETF explicitly tracks a specific index, the MSCI USA IMI Information Technology 2550 Index. This is a defining characteristic of FTEC, as it falls under the category of index ETFs. Here's a deeper look into FTEC's reliance on the chosen index. Passive management. Unlike actively managed funds that employ fund managers to make investment decisions, FTEC follows a passive management approach. This means it strives to mirror the holdings and weighting of the MSCI USA IMI Information Technology 2550 Index. Index composition. The chosen index targets U.S.-listed companies within the information technology sector. It incorporates large, mid, and small-cap stocks, offering broad exposure within the tech industry. Weighting scheme. The 25/50ths in the index name refers to its weighting methodology. The index uses a modified market capitalization approach. While holdings are generally weighted based on their market cap, a company's total market value, there's a twist. Smaller companies, between 25% and 50% of the largest company's market cap, receive a slightly higher weighting compared to a pure market cap approach. This increases FTEC's exposure to mid-cap stocks relative to a traditional large-cap focused technology ETF. Benefits of tracking an index. Diversification. By mimicking the index, FTEC offers diversification within the tech sector. This reduces risk compared to investing in individual stocks. Lower fees. Passively managed ETFs like FTEC typically boast lower expense ratios, annual fees, than actively managed funds. Question 4. Does the FTEC ETF use any leverage or derivatives? No, the FTEC ETF, or Fidelity MSCI Information Technology Basket ETF, typically does not use leverage or derivatives to achieve its investment objective. Here's why. Investment strategy. FTEC is classified as an index ETF. This means it aims to replicate the holdings and performance of a specific underlying index, the MSCI USA IMI Information Technology 2550 Index, in this case. Index composition. The chosen index itself represents a basket of various companies within the U.S. information technology sector. These companies can range from large-cap giants to smaller mid-cap and even small-cap players. Passive management. Since FTEC tracks an index, it follows a passive management approach. This means the fund doesn't employ complex financial instruments like leverage or derivatives to try to outperform the market. Instead, it strives to hold the same securities as the index in similar proportions. Why FTEC avoids leverage and derivatives? Leverage involves borrowing money to amplify returns, both positive and negative. Index ETFs generally don't utilize leverage as it can significantly increase risk and potentially deviate from the performance of the underlying index. Derivatives are financial contracts whose value is derived from an underlying asset, like a stock or index. While some ETFs, particularly leveraged or inverse ETFs, use derivatives to achieve their specific objectives, FTSE doesn't require them to track the chosen index. Benefits of avoiding leverage and derivatives. Lower risk. By staying away from leverage and derivatives, FTSE offers a potentially less risky investment option compared to leveraged or derivative-heavy ETFs. Transparency. The holdings of FTSE are typically more transparent, as they directly reflect the holdings of the underlying index. This can be easier for investors to understand compared to complex ETF structures that rely on derivatives. Question 5. How has the FTEC ETF performed in different market conditions? FTSE ETF's performance is intrinsically linked to the performance of the underlying index it tracks, the MSCI USA IMI Information Technology 2550 Index. Therefore, to understand how FTSE behaves in different market conditions, we need to analyze the historical performance of the tech sector as a whole. FTEC ETF in bull markets. Generally, technology stocks tend to outperform the broader market during bull runs. This is because bull markets are characterized by economic growth, rising investor confidence, and increased appetite for riskier assets. Technology companies, often at the forefront of innovation and growth, can benefit significantly from these conditions. As the MSCI USA IMI Information Technology 2550 Index reflects the performance of U.S. tech companies, FTSE is likely to experience strong returns during bull markets. FTEC ETF in bear markets. Conversely, bear markets characterized by economic downturns and falling investor confidence can be harsh on technology stocks. Since these companies are often valued based on future growth potential, any signs of economic slowdown can lead to a reassessment of their valuations and a decline in stock prices. Consequently, FTEC's performance is likely to suffer during bear markets, potentially mirroring or even exceeding the decline of the broader market depending on the severity of the downturn. FTEC ETF in volatile markets. Volatile markets with frequent swings in price can be challenging for FTSE. The technology sector itself can be inherently volatile, with stock prices reacting strongly to news and events. This volatility can be amplified within FTSE, especially if it has a higher weighting towards smaller and more volatile mid-cap stocks compared to a large-cap focused technology ETF. Additional factors to consider. Interest rates. Rising interest rates can dampen investor enthusiasm for growth-oriented technology stocks, potentially impacting FTEC's performance. This is because higher interest rates make fixed-income investments more attractive, drawing investment away from riskier assets like tech stocks. Global events. Global events like trade wars, geopolitical tensions, or pandemics can significantly impact the technology sector and, in turn, FTEC's performance. The interconnectedness of the global economy means that disruptions in one region can have ripple effects on technology companies worldwide. Question 6. What are the key risks associated with the FTSE ETF's investment strategy? The FTSE ETF's investment strategy, which involves passively tracking the MSCI USA IMI Information Technology 2550 Index, comes with inherent risks. Here's a breakdown of some key areas to consider. Sector concentration. Tech industry dependence. FTSE concentrates solely on the technology sector. This means its performance is heavily reliant on the fortunes of the IT industry. If the tech sector experiences a downturn, FTSE is likely to suffer significant losses, even if the broader market performs well. Limited diversification. compared to a diversified portfolio that allocates assets across various sectors and asset classes. FTEC offers less diversification. This concentration can magnify losses if the tech sector encounters challenges. Passive management approach. Market performance. FTEC tracks an index, aiming to mirror its performance. This means it won't outperform the market even if there are exceptional opportunities within the tech sector. Actively managed funds, with skilled portfolio managers, might have the potential to capitalize on such situations. Limited control. Investors have limited control over the specific holdings within FTEC. The fund composition is dictated by the underlying index, and investors cannot choose individual stocks. Index-specific risks. Index construction. The performance of FTEC is tied to the specific index it tracks, the MSCI USA IMI Information Technology 25/50th Index. The choice of companies and their weightage within the index can influence FTEC's returns. Tracking error. Even though FTEC strives to mirror the index, there can be minor deviations in performance due to various factors like expense ratios and fees. Additional risks to consider. Market volatility. The technology sector is known for its volatility, with stock prices fluctuating significantly in response to news and events. FTEC, especially if it has a higher weighting on mid-cap stocks, can be even more volatile than the broader market. Liquidity risk. While FTEC trades on an exchange, there's a chance that the underlying holdings might be less liquid, especially smaller mid-cap companies. This could make it difficult to buy or sell FTEC shares quickly at a desired price. Mitigating these risks. Portfolio diversification. Consider including FTEC as part of a well-diversified portfolio that allocates assets across various sectors and asset classes to reduce overall risk. Long-term investment horizon. Since the technology sector can be volatile, FTEC might be better suited for investors with a long-term investment horizon who can ride out market fluctuations. Understanding your risk tolerance. Carefully assess your risk tolerance before investing in FTEC. If you're uncomfortable with potential losses, a less concentrated ETF or a different asset class altogether might be a better fit.